Hello, ladies and gentlemen. Marty Erico, TradersAudio.com, talking energy pits here for you. Let's take a quick look here at your levels here from the pit session for today. We're also going to talk about some news that hit the market as well today. Again, pit session high here, talking 97.98 on the high end, 97.34 for the low end. Then we closed and settled the day at 97.94, just a touch below that 98 even level. We are expecting here crude just to kind of creep up around that level. We saw it in the overnight session, as you can see on the chart below on the left. We made it all the way up to 98.24 last, and on your overnight session last night, but yet to break it here in the pit session, so we can use that 98.30 as a very important level of resistance, as we mentioned many times here. Over a series of like 5 years, we hit that level a bunch of times. Pretty important level. Moving it on over quickly to the natural gas, we saw a nice pit session, bid session as well here, as we're approaching rapidly some major resistance above at the $33.35 half level. That's 33.55. We had a pit session here with the high up at 33.44, the low down at 32.73, and we closed and settled the day at $3.33.6. That's 33.36. Again, with some major resistance at 33.55. We're probably going to break it to the upside because we have inventories tomorrow. Looking for a draw, obviously, in the inventories as we are in the middle of heating season. Before we just talk about pit activity here, let's just talk about some general comments here. Of course, we saw the dollar trading lower today. The DXY trades back into below the 79.5 level. We saw the euro push higher. We saw the CAD push higher. And the CAD, most important commodity currency here, that is our crude oil commodity currency, if you will. Again here, dollar trading lower on poor GDP number that came out at negative 0.1%. Again, we were expecting a full 1% gain, and that was basically due to a decrease in government spending we've seen. So lower GDP number making the crude and gold trade higher, along with the dollar trading lower. And we also had Fed news out around 2:15 today. Again, everything looks status quo, talking basically unchanged virtually across the board. Continuing just to see the Fed proceed with their asset purchasing program. Spending $85 billion per month. Again, they continue on with that. They also kind of focus on unemployment rate. The unemployment rate, they're saying, has to get down to 6.5% for us to start seeing any type of rate decision, basically rates building up. Until then, we'll probably see status quo in our rates, which it stayed status quo at 0.25%. Ahead now, as we speak about the Fed really focusing on an unemployment, ahead of that we have our numbers here tomorrow for claims, and then obviously Friday the big jobs report. So we are going to keep an eye on it, as the Fed is, as the big traders are focusing on it as well. Guys, we'll go over basically the game plan of attack come tomorrow morning at 8:50 for the claims and in reaction to the claims, and then obviously we'll talk about on Friday what we should be looking out for as well. So not many trades after the Fed report. Again, in the pit, we really just saw buying in the afternoon, causing us to kind of rally into the close, but not really many big trades here in the pit after Fed announcement. So most traders here that I spoke to, they're actually looking for a crude to at least creep up to the 98.30 level. And like we mentioned many times, a close and settle above that level would cost us to push up to 100. There was a lot of interest actually in the $100 level in the options today, and a lot of traders whispering on the floor that we can meander and creep our way up to the $100 level in the crude, and if all our markets kind of correlate here. And the reason why I say it is because gasoline, we even seen gasoline catch a big bid today, again now trading above $3, settling the day around 302.50. We even saw heating oil catch a nice bid here, also trading above the $3 handle. I believe we settled above 310 today. And both of those markets catching a nice bid. If the spreads are any type of indication here, the spreads in contango tightening up quite substantially. We see even the crack spreads showing crude to be firm, and we're looking at the calendar spreads for crude to be showing us that we're going to be firm. Obviously, the Brent TI spread, Brent trading over 114 today, also an indication that we can see $100 crude. So all of our kind of evidence line up, but really the only variable that we're missing is this volatility, at the money volatility, extremely cheap, as we've been talking about here the last week or two. Very, very low in volatility. We're just talking around 20%. $20 in the OVX. Finally, as we mentioned how cheap it was, we saw a lot of buying in that as well as we watched the OVX kind of close and settle the day up at $23. $22.88 was where the close and settle on the OVX. Implied vol trades about 22.5%. So we're going to be keeping an eye on open interest, obviously, in the options, open interest in the outright contract, and most the spreads and our supply-demand differentials. Again, with inventories out today showing a greater than expected build, we still saw prices catch a bid, so that means that we could obviously see that $100 area in the crude, and obviously we're going to have to keep our eyes on our supply-demand differentials. That's about it here, guys. This is Marty Errico coming to you live from the NYMEX. We're talking energy. Pits for you, tradersaudio.com.